Hi and welcome to the Market Rag for Thursday, December 20th, 2007. This is going to be the final market rag until after the holiday season. Pretty quiet day out there in the market. Again, not big percentage moves. The big one was the NASDAQ, and mostly that was because of Oracle's good news. Here in the commodities, again, not too much changing going on. As we look at the grid for the indexes and commodities, same situation, a lot of yellow. These moves up have cleared the extremely low signal off the S&P 500, but it's still there on the Dow Jones. You can see Euro down here at the very bottom of its range. And besides that, not too much to report here. The last few days we've had some real small candles, and what this has done is put us in a position where we could have a decent sized move in the next day or two. The problem is I have no idea which way it's going to go. We're right in the middle between this resistance area and this support area. And at this point, I figure it could go either way. The NASDAQ had a little better pop than the rest of them due to Oracle's news. Here's a chart of the Euro, and again, sitting down here near this support area. And the bonds put in a pretty bearish signal here, but it's still above this line, so I got to be a little bullish. Looking at our sectors, again, you'll see energy's doing pretty good up here, solid green across the board. The one that's kind of slipping are the transports. They've turned a little bit more red in the last couple days. The others are the same, financials, dead red, and consumer discretionary pretty red. Here's that move down in the transports that's put it in the red area on the grid. We had a nice little comeback in the materials area. And here's your strong one, energy, making a nice charge for this resistance area. Utilities look to be trying to get their footing in place here right at the support area. You'll see we now have a lot more allocated to the long side than we do the short side. My gut just says that's kind of a good thing right now. I was able to eliminate a lot of risk out of our portfolio today. As you can see, we only have about 2% of our account at risk right now. And with the way our portfolio's divvied up, I'm pretty happy with that. Looking at the closing R, again, most of our money is still in the shorts we're holding. The longs have now turned positive. We've only got that PPL trade that's not looking very good for us. I had to show you guys this. We had this order for Activision out if it could break above these highs. And we've had this order out there for quite a while. Well, you'll notice this morning it gapped up over our entry price. Here's a 30-minute chart on Activision, and you'll see our order was right in this area. It gapped up this morning and I thought we weren't going to get filled. Well, then it drops down, fills this, and then look at this turnaround it gave us. I feel we got pretty lucky on this one, but we had the order out for a while, so patience pays. Even though we've gotten rid of a lot of the extremely low breath signals, my gut just leans to the upside on this. I don't know if I'm right or not, but the portfolio's divvied up in such a way that no matter what happens, I think we're pretty set. You guys enjoy the rest of your evening and have a great weekend.